The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we take a look at the market action midweek, we continue to have concerns in cattle with the spread of HPAI in dairy being reported in more states now. We're going to talk about that. We're also going to look at a pretty solid day across the grain trade as a whole on Wednesday, led by the wheat complex. Joining us for a conversation, happy to have him with us here once again, Mike Zuzolo with Global Commodity Analytics. And Mike, thanks for joining us. I hope you had a great Easter holiday weekend. And, let's dive in here. Normally, you and I start with grains. I want to start with livestock, though, and talk cattle, because that has been the news here the last few days, this outbreak of HPAI in dairy herds in Texas and Kansas, now spreading to Ohio. Presumptive positive tests announced there Wednesday. And really, this cattle market took it on the chin Monday, tried to rally back some Tuesday, and then kind of just was topsy-turvy Wednesday. I don't know where to even start with this cattle thing, Mike. I guess your perspective on what is happening in this cattle market and the psychological impact right now.
Yeah, I come at it from a different perspective than many right now, Jesse. So I'll say that right up front. And the perspective I come from is the funds versus the fundamentals. And that is today's algorithmically driven traders and funds use newswire headlines. They're driven directly from the newswire source, say a Dow Jones or a Reuters or an Associated Press or a Bloomberg, and they're driven straight into the algorithmic traders' models, and they trade headline news in some cases. Some models that I found in commodities are based almost solely upon weather. Some are based solely upon newswire updates and headlines. Some based upon a combination. My point being is that this market is unfortunately being controlled by, in my opinion, the fund-driven headline news that we continue to get across the waves. And Wednesday was an extremely valuable day to show that once again. We had tested the downside. We were coming back, and then we went back down again. April cattle went down to its Monday's lows. I think that's around 179.75. That's a number I don't want taken out on a close. The same with April feeders. I don't want Monday's closes violated or Monday's lows violated on a close, because that increases the momentum and sentiment to the downside, or it could, I think. And so getting back to the idea that we had several news stories come out after lunch or right around the lunchtime period about the avian influenza that the human being got in Texas at the dairy had been mutated. And this is what you're looking at is from Reuters or LSEG, that this Texas farm worker saw a mutated spread, and the CDC put that out. And that opened up the downside all over again. And that makes sense to me, because it was a headline-driven news flash that the algo traders jumped on and the models jumped on. But it also goes back to, let's think this through a little bit. We know the poultry side has it. We know the poultry gets culled. So that's negative for the feed side of the equation, not negative for the eggs or the meat side of the equation. In fact, probably bullish, because you're cutting supply by culling those birds. Mm-hmm. The dairy side of the equation, APHIS, CDC, FDA, in my opinion, they've got that totally covered. Either the milk gets pasteurized, or if it's an infected cow and they know it, it never enters the milk system, never enters the food supply chain for human consumption. So milk is covered. What I really think is the problem, and what really opens up the downside, in my opinion, i.e. major Asian importers like South Korea or Japan could say, we're not taking your meat anymore because humans can get it if they're associated with raw pathogens or raw meat virus, because we know that now from this Texas CDC update. But it goes back to 10 to 20% of the commercial beef slaughter, that we consume here in the United States is from the dairy side of the equation. In Great Britain, it's even larger. It's upwards of 50% in some years. And so what I believe very sincerely that we have to do very quickly now in a scientific manner is say, if a dairy herd has HPAI, that dairy herd, none of the slaughter, none of the cull cows get into the human food chain and don't go into the beef production side, so that we don't have to worry about it being used for ground beef or whatever it may be. We got to get there relatively quick, in my opinion, or I think we will start to cause a increasing fear of the consumption side. And if the market knows and the headline news comes out and says, we don't have to worry about our beef food safety through the dairy and the HPAI, I think then the funds are off our backs as far as the funds versus the fundamentals. And I know it's a long-winded way to go about it, but I really think it's absolutely critical. And I'll end with this. We went negative in crude oil prices during the pandemic. These markets can get away from us now, and they can get ugly. And we could wreck our whole industry if we're not careful, especially an industry that's been hit with drought for several years in a row. So I just think time is of the essence right now. And the federal government agencies, who I think do a great job, they just need to really get on it and say our beef supply is secure, because none of this is going to enter into the commercial meat supply. Therefore, humans don't have to worry about getting HPAI.
Fantastic perspective. I'll let you go long-winded on that any day, Mike. It's a great way to look at it and some good things to frame up. And you talk about the funds versus the fundamentals. Let's look at a few cattle charts you shared with me as well, just to maybe illustrate some of this. And I have to think here, looking at the monthly live cattle chart, that big dip towards the top, maybe reflective of what we saw on Monday here potentially, Mike.
Yeah, and you notice that we ended the last two bars in this live cattle chart are in the red, and that means that we ended March negative, and now we're entering into April in negative territory, and that chart's looking more and more like a double top, and we're now back below the 2023 highs from September. Now what I have to focus on, Jesse, is the green support line, which is essentially the backbone of the whole rally since the 2020 lows. And if we take that green trend line out, we're probably also taking out the 2014 high of that 171, 172 area. If we do that, you only have one support level left, and that's your, I believe that's a 50. See, that would be, I think, a 26-month moving average or 24-month moving average. I'd have to double check that. But you're really getting dangerously close to opening up the downside. And this is where right now the cash remains well above futures. Negotiated cash last traded last week at 188.50. That's the white line on this chart versus the CME cattle. This is a daily chart. And so this is a daily continuation of Chicago Mercantile Futures in the bar chart. And you notice that green and red bar chart just got done today testing, as I said, Monday's low, checking it and closing back above it, but not just Monday's low, but again, a mini backbone of the whole uptrend since the beginning of December of last year. That's why this time period is so critical, in my opinion. But you've got cash underneath you right now, so I think we still can pull this thing together and take the futures back up to meet the cash.
Do cattle folks need to get aggressive here to maybe lock in some hedges to protect downside with all of this uncertainty right now, Mike?
I do think you do. I mean, it's not hard to lock into a June live cattle put or a May feeder cattle put when you realize that, as I said a minute ago, and I'm not trying to scare anybody, that's the last thing I want to do. But when you know that prices can go negative because of black swan events that you were not expecting, play this out in your mind. Say that this continues to get worse, not better. All of a sudden, the world thinks they're all going to get avian flu. I've already started to see articles out there. Is this the next pandemic? So we really just have to be conservative and safe. If we lose technical support levels, play it logically, methodically, and just get some puts underneath you. If generally speaking, I can't make specific recommendations on programs like this, but that's what I do if you were working with me.
No, of course, the future trading, the risk of trading futures and options can be substantial. We got to remind people of that. Mike, real quick, since we're on livestock, before we go to grains, hogs, I feel like this hog market's maybe getting a little bit of benefit here of some of the concern in cattle and giving the hogs some support here at the start of April.
Yeah, I agree. And we've also seen the hog market in China kind of turn on the afterburners. The Chinese news is good. We're making new all-time highs in gold. We're making new 2024 highs in crude oil, in RBOB unleaded gas. The Chinese economic data is good. They're not out of the woods, but it's a lot better than it was. And the Chinese Dolly and Hog futures saw another, I think, 2 to 3% rally in the overnight trade. So we've got the summer months now above 105. That's kind of been my target of 105, 107 in the June futures for hogs. So wouldn't be opposed at all to start looking at laying in some hedges for the summertime hog market, just on the idea that this may come over, and what is benefiting the hogs right now may actually hurt them down the road if this thing starts to unwind itself.
We are talking today with Mike Zuzolo from Global Commodity Analytics here on Market Talk. Mike, great thoughts in livestock. Let's go to grains. We got some happier things to talk about, at least on Wednesday's action. The wheat markets were the upside leader. That seemingly spilled into beans and corn after we've had a pretty rough start to the month following all the USDA data last week. Let's start with the Bloomberg Commodity Index. You and I always like to take a look at this every so often. And what are some of the features you're watching here this week, Mike?
It just continues to wedge more and more, Jesse. I've redrawn that wedge 2 or 3 times now at this point, because the markets continued to drive towards reasserting new resistance, new support levels. But I think it's absolutely critical that the wheat market takes over here and leads us higher. We have 2.5 million less winter wheat acres. Yes, we added some grain stocks on last week's reports, but I think the crop conditions now behind us, and quite a bit of weather ahead of us, it would suggest to me that some short covering may be necessary in order to build some risk premium, especially given the geopolitical risk premium crude seeing, and also given news Wednesday late in the session. And this happened after the futures was trading up by double digits. The news late in the session that Russia may be halting exports of a second Russian export company in terms of grain and wheat exports. And so I'm inclined to think that the Russian inflation, the Russian supply of wheat are coming together finally, and they're not wanting to let as much go to the world marketplace in order to keep their own domestic prices from getting too high for their bread and for other things. So I think we've got the makings of our leader, the wheat market, in this Bloomberg Grain Commodity Index, given how oversold it's been for almost 6 months now, that it wouldn't take much to turn this market around. And I'll also throw out the idea that it was in April of 2021 that the wheat market rallied after the United States Department of Agriculture came in and tightened the supplies in their update, their first survey-based wheat production forecast, took the wheat to an 8-year high. We essentially had about $1 run in the soft red wheat, went from 601 to 773, and that really ignited the December corn price. So not predicting that, not forecasting that, but April can be a good month sometimes when you have low prices in wheat and corn.
Well, your thoughts on some of that wheat news out of Russia, and I noticed too, I think it was the IGC said Russian wheat prices look like they're ticking up here too. There's some weather concerns in Western Europe and the Black Sea, it sounds like. So it all kind of feels like maybe some things are coming together here for wheat. Let's look at the monthly HRW chart, the KC wheat chart, seeing some more wedge patterns here as well. Mike, what are some things you're watching there?
First and foremost, the viewer and listener needs to understand I'm putting the HRW out there first ahead of the soft red, which is an anomaly for me. I usually go after the soft red, which is more widely traded by the funds. But the HRW remains in an inversion. In other words, the May wheat in the hard red is premium to the July wheat. It says we're very tight in supplies here domestically in the United States. So it says to me that it probably has the best opportunity to break up to the upside. This wedge is as important as the support levels in the cattle market, Jesse, especially after Wednesday's trade. We traded 540 on the soft red. We traded 560 on the hard red. You can see that 560 trade. We closed 20 cents better than that on Wednesday's close. But look how closely we got to breaking through not only last month's lows, but the wedge and breaking to the downside. So time is absolutely of the essence, is what this chart tells me.
Well, let's think about wheat. We've talked about wheat being the leader. Let's look at corn a little bit closer. And I know in the case of our corn markets, largely we've gotten back at or below where we were ahead of the USDA reports now. This corn market just remains kind of yucky. You mentioned weather in front of us here, and I want to turn our attention there a little bit. You're looking at some of the maybe concerns about corn drought in South America as one piece of the puzzle here, Mike.
I've been highlighting this for the last few weeks, and it seems like it's finally coming together. We have had since the holiday time to look at the USDA ag attaché out of Brazil, and he lowered the crop for Brazil's corn by 2 million tons versus the official number to 122. That doesn't sound like much, but what he did to exports was absolutely amazing. He cut the exports by 7 million tons down to 45 million metric tons versus USDA's 52. That's over 9 million tons less than last year for the marketing year if it ends up being correct. And so between that and then late in the day today, Data Grow came out with their updated corn and soybean forecasts. They took their corn for Brazil to just under 115 million metric tons. I think a big reason is this chart that you're looking at right here, because this drought index, stress index, shows you that currently, as of early April, we are still worse in Brazil than in Argentina than we were last year at this time, and we're actually near the top of the 5-year range. And I think this has gotten hardly any play to it at all in the marketplace. And this is coming on the heels of a 90 million corn acreage planting figure from last Friday. So I really think the HPAI issue took a lot of the air and a lot of the steam out of the engine when it came to the corn seeing more short covering after the strong day last Friday.
One more chart for us to look at here on the video feed, tied with corn, the December corn historical. And I just, I look ahead at this corn market here and everything you're talking about and thinking about, okay, our next milestone in front of us is the April WASDE coming up here in a few weeks, spring planting in front of us. I mean, I guess walk us through this chart and just some of your thoughts overall of what we're seeing in corn and what we need to think about here for corn right now, Mike.
Every year's different, but I like to still watch and see where we're at in price and in trend when it comes to the new crop futures, especially early in the marketing year. And April for both Dees corn and November beans are very similar to one another in that they're very close to both the 2021 futures new crop and the 2014 new crop futures. Here we're looking at the Dees corn, as you say, Jesse, and we're really close to the 2021 price action right now, both in terms of actual price and having a little bit of a bump down. But April was a decent month for both 2014 and 2021. And that's kind of what I'm looking towards again this April, to be able to get some hedges in place. And as I talked about a little bit ago, that December 2021 corn had a very big surge up to about $6.30 a bushel from essentially the current price we're at right now in new crop futures. And that was almost all led by that dollar rally in the wheat, that 8-year high in the wheat in April of 2021 heading into May. So this is, again, I think, supportive of the idea that if we want higher corn values, we really got to get the wheat market moving here.
Well, Mike, great stuff. Any other notes? You touched on soybeans just a little bit. Anything for you of note in this soy complex we need to watch?
Yeah, soybeans after the report in terms of acres, stocks, and price action, it tried to go it alone again without the corn and without the wheat. It, I don't think, can do it for the reasons we've already talked about, Jesse, but also because if this HPAI worsens into the summer, it's probably going to really hurt our meal demand. And meal has already been the short side of spreads against the bean oil. So that's probably the biggest feature in terms of a negative, price negative mindset that I could develop, is this really turns into a big problem for the poultry industry. And we hear of millions of birds called at the wrong time of the year. So if we don't have planting delays in corn, it may really disrupt that April move to the upside that I was just talking about. So that's the big Achilles heel here, I think, when it comes to what the soybeans are looking at in terms of the meal. So I'm still a hedger in beans first and foremost.
And finally, real quick, I got to ask you, in these outside markets, you touched on crude. Gold has been sharply higher here in the last few days. I'm keeping my eye on that as well. Is that something you're watching, or any other outside market notes, Mike?
Yeah, without a doubt, because you've got a situation where the gold's making all-time highs, silver's making new 2024 highs, the dollar is breaking now to the downside, and I think in part because these metals are saying we're not going down, and crude's saying we're not going down. This market's inflationary in terms of what it's signaling to us in the metals, and the dollar's been fighting it. The bond yields have been fighting it. And I think something's going to have to give, and I'd be watching that real closely.
Mike, great stuff. If folks want to reach out to you with questions and talk with you about things, I know they could reach you very easily. How can they get in touch?
Globalcomresearch.com. That's globalcom with 2 M's research.com. And be sure to understand, I'm no scientist. I'm just giving my opinions on what's happening with this avian influenza.
Well, we appreciate the time. Globalcomresearch.com. With that, Mike Zuzolo, Global Commodity Analytics. Mike, thanks for joining us. Have a great one. We'll talk to you next week.
Thanks, Jesse. I appreciate you having me.
That's going to do it for the show. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@markettalkag and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.